don't forget to get my free training underneath this video and subscribe, like, share, comment, follow, whatever it is you can do. So people ask me about US indexes constantly, and there's only one way to say it. That is a very high stock oscillator. It's high price. Okay, well done if you didn't pretend just because your stock oscillator is high, your RSI is high, the market will just fall when you say, you know what, SPX, I want you to fall just because the stock oscillator is high or the RSI is high. Whatever you're using, doesn't matter. It doesn't work like that. And in many cases, it will keep going higher. Okay, so you can't use that as a basis for plainly why you're entering short. I think, similarly to your euro dollar, etc., it's losing steam. I think it's a matter of time until you get some kind of sentiment that comes in to pull this back. Nonetheless, you can see it's losing strength at the top here. I like it short for that reason. I would say the reasonable fall would be down to 4430. You can see it's downtrending still. It hasn't got above that previous high. It did break this one. So I would really look at the longer term picture because of that. You can see that you're on week 3. It's come way up. You're going to head into various areas of key resistance now, okay, along here. So if you do touch slightly higher up, I wouldn't be completely surprised. 4,550, but nonetheless, I would say you're getting short value if you're starting to get short now. The key thing here is if you look at this point, let's go from the 30th of October. Let's count together. 1, 2, 3, 4, 5, 6, 7, 8. 1 red candle. 9. That is hardly a red candle. It doesn't pull the market down. 10, 11, 12, 13, 14 red, green candles, or up moving candles, and 1 red candle. There's got to be a problem with that, hasn't there? If you look back, when was the last time that happened? You know, I can't see it for a long time, a very long time. So in other words, it's rare that the market will just go up and up and up for days on end. It has to come back at some point. The ideal short zone, I would say, like I said, is now. I think that's what you'll get. That's my bias. Anything up to 450, 4550, it's still short for me now. You've got an area of early key support just over here. Okay, would be ideal. I would expect your stock oscillator to come down here. Now the thing is with the S&P, if you go on your monthly, there's very rapid growth from COVID time all the way up. And then you get your retracement. If you do go up like this further, okay, or you go far down like this, it just remains to be seen. No one knows specifically, but just be prepared for either outcome. I would say if it does turn out that the market does keep going above these previous highs, I would, again, just like oil, gold, all of it, the markets are getting moved out a lot. And I would say it's more likely that things are going to change rapidly because the rhetoric you're seeing from central banks globally is now that things are improving. It gives people, in some cases, a false sense of security, because if it turns out that there's big energy problems or there's growth problems or whatever, then you'll get a big change. So I would say it's ideal for shorts now. I would hold off any entries, okay? Be a risk-averse trader, it's much better. And perhaps place them slightly up in line with this previous high. Don't be shocked if you come above that previous high, okay? It can happen. Don't be shocked. Well, you'd be short anyway, but if you can pull all the way down and something drastic happens as well, you have to be prepared for black swan events. But all I'm interested in at any time is trading the market now. How do I like it now, today? That's all I'm interested in. And clearly, if you've come up all this way, you have to be asking yourself, when's it going to fall? The longer these moves go on, the more probable that gets. Because, like I said, you've not seen that many candles in a row for a long time. It's rare. When it does happen, you can see the falls are larger. Okay? Because you're just waiting for that change in sentiment. So now and another 25 points, I wouldn't be surprised if you've got a really good stretch through the net. US100 is the same, more or less. You're getting rejection there. I like this short. Okay, you saw it short here. You've seen it fall away previously in July. Okay, I would consider that. Okay, if you go to your daily, you've fallen once there already. You had minor push, didn't do a lot, and you're now reattacking those highs. So I think if it's a minor short. It is losing steam, but just be aware again that it can go above the previous high. Don't pretend this is the be all and end all, because it's not. It's a short now. Maybe just take a little bit of it, and then again space your entries out at these highs. Don't be greedy. Don't say I want to catch the next biggest fall that there ever be. So like I said, if a black swan occurs and it keeps going above the high, you'll be stuffed. Okay. So it is short now on the same basis. You've come up extraordinarily. You're well off your key moving averages. You saw it fall from this point before. So I would short. That's my bias on the US indexes. They've just come up for such a long time that I would rather sell them than buy them accordingly. If I go on to something like my UK100, which I trade a lot myself here in the UK, believe it or not, inflation down here, inflation down the US. There's a lot of positive market sentiment. The only problems with the US economy is growth. People are very worried about it. I wouldn't be shocked. I've already done a video on this, but I wouldn't be shocked if you get up here eventually. These areas that you're pushing into have provided no barrier, really, okay, previously on every single push. Now you'll notice, like I said, I've said it before, I'm a price action trader, so I'm looking for repetition and probability in the market at all times. You've seen several times already the price has made it 4 times there, back to this high. You can see it's made it down here 4 times. So there's 8 occasions where you would have been correct. So for that reason, I'm looking to continue that market trajectory. I like it short in line with these key moving averages, and I don't think it's quite done yet. I think there's still positive market sentiment driving the FTSE along. It's too late to buy it if you haven't bought it. You're coming into areas where you have fallen before, so just be careful of that. Someone asking for gold, I just did gold, so just rewind the stream, it's on there. You might get an intraday short, but long term, I like it higher. It's different to the US indices. You may find that this pops slightly higher up, as does the US indexes. You've got to remember that all indexes move differently. They're not the same. Okay. Your AUS100, I'd take it. Sorry, AUS200, not like your FTSE 100. No, it's your AUS200. I took it lightly long. I'm still holding my long entries. I think you'll get up here as well. The AUS200, I like the DAX. I'll go on the DAX in a minute. But all of this, you can see, is just moving up to where it was before, when things were a little bit more rosy and a bit more pretty. Okay. All of those areas were areas where it went from being rosy and pretty to falling very quickly. So that's why my short bias lies slightly higher. If you look at something like the French stock market, the CAC, I like this short. In fact, I'm going to take it short, I think, once I'm finished with this. If it goes slightly higher to 7270, again, I wouldn't be shocked. I think we're almost out of steam on these, but you've just had such a long time of up move across the board. And again, it's attacking these highs. These highs are not providing much. Okay, the FTSE is a bit different because you had UK inflation data. It's a lot like the pound. It's fallen out of line with all the others, and it's slightly further back. Okay, it needs time to catch up, catch its breath, but you're attacking that previous high really harshly, 200 MA there. So I wouldn't be shocked if the S&P, the US100, the CAC, the AUS, everything goes slightly higher than where it is, and that wouldn't shock me. I don't think they're completely done, but I think they're getting there on this latest move. I also wouldn't be surprised if the overall trajectory takes you above major previous highs as well. Because if people get all hyped and say, wow, everything's wonderful, they'll start buying. But then when the sentiment changes and suddenly it's not, behind the scenes, smoke and mirrors, it's very different. You know, that could change things very rapidly, and that's all we're trying to do, because inevitably it will change. The sentiment will always change. Now you can see on the DAX, you've smashed through this area of key resistance. It didn't hold much. We spoke about DCAing higher. Again, you've got a little bit of room until you get to this point here. Okay, that comes at 1600 over there. Right, so a little bit higher again. I think there's room across the board, but the DAX is looking really strong on a rebound. And again, the fall is pushing you so harshly. Do not be one of those people who says, you know what, I'm going to short the hell out of the DAX. Yes, you have a good short area, but you are pretending that there is no case for the German economy to grow than it previously was at some point. So be very careful. Okay, if people want to hype buy, like they did with the FTSE when it reached new highs, you had energy crisis, you had inflation problems, but the FTSE still makes an all-time high. Be very careful, because it's down to the companies within the stock index. Okay, if they're based on something that is changing, then the, you know, if you've got a heavy weighted stock in an index like an oil company and the oil price rises, people tend to buy into those oil companies, and it brings a whole index up regardless of what's going on elsewhere. So that's why you can get those highs. That's why you've got to be so careful, okay, because that can always happen. So I think you get slightly higher on your indexes. There is strong positive market sentiment and a strong case for buying on stock markets around the world. That's why you're seeing it. So I've covered oil, gold, stocks, stock indexes, everything. Don't forget to get my free training underneath, and like, share, comment, follow, and subscribe.